Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, November the 1st, 2013. So we had a pretty blah day on Friday. Let's just take a look at the Dow futures on the daily chart. So essentially what I've been looking for is, here's the high bar, and I've been looking for some sort of a close below the low of that high bar in order to signal some sort of a pullback. Now, we didn't get that. You can see we still have not closed above, or below rather, the low of that. And I'm just looking for some kind of signs we're going to get a pullback. If you notice, the slow stochastics are way overbought. So I'm looking for some kind of a pullback into the 21 period exponential moving average, or some sort of decent pullback in order to look for a long opportunity. Now, that, having said that, that may not happen, because if you look at, we tested the high, we might get a minor pullback from the high and then a push through. So that's one scenario. That's one scenario that I'll be keeping my eye on. And if that plays out, that's basically going to be the continuation of this Darvas box signal here. If you look at this weekly chart, that will be the continuation. Oops. Let me just reload this. That would be the continuation signal of this weekly chart. And, that printed a target as high as 16,400. So if we look at this sort of scenario here, we may not get a very deep pullback before we actually continue and break out through this this weekly Darvas box. This is a very, very macro, powerful signal. You can see the weekly squeeze as fired 2 bars ago, and we're reapproaching this resistance high level around 15,532. So if we get back up above, I'm sorry, this is a new Darvas box that's formed. The original signal, and we are back above that original signal, was right down here at, let me just see, there it was there, 15,532. So this was the original signal, and we needed to get back up above this level right there. So you can see we are above that level. The weekly squeeze is fired. This is pretty powerful. When this happens, you can see, there's the potential to move quite a bit higher. So I'm macro long bias on this market, but where I'm personally having difficulties is, where do you actually get into the move? Like, is this a deep enough pullback to the 8-period exponential moving average? Should we be looking for a pullback to the 21 exponential moving average? I mean, I would really like to see this sort of scenario happen, where we do this, we get some footing, and then we do this. But that may not happen. So at this point in time, I am long side bias, but we are overbought, and I would like to see a deeper pullback. But if we actually hold this 8 exponential moving average and we break through these highs here, then maybe it's something not worth fighting, and just it's just a go with. So at this point in time, macro long bias. I don't really know. I'm not really sure at this point where the best entry opportunity might be. So I'm going to be watching and assessing this closely on a day-to-day basis. So let's look at the S&P. The S&P, not sure if it closed below its low bar on this day, but the S&P looks like it's set to potentially, pull back a little deeper. I like on the S&P a pullback, to somewhere close to the top of this peak, which would come into that 21 exponential moving average. I like that zone right here as a pullback opportunity. Let's look at the Nasdaq and Q. So the Nasdaq's been really strong. Hasn't pulled back much at all. It's been holding its 8-period exponential moving average on the way up. Macro long bias on all of these stock indices. The IWM, let's take a look at that. That tracks the Russell. So you can see the Russell pulled back a little bit better. This is more, the kind of pullback you want to see. It's pulled back into the 21-period exponential moving average, and it looks like it might have the potential to move back a little bit further, but you can see you've had a MACD crossover. Your fast stochastic has bottomed out, and the expectation would be some sort of a bounce from there. But the slow stochastic has some room to move down to the, down a little bit lower. So I don't know if we're going to get a deeper pullback than that. You've got some, see if that kind of lines up with anything, with a trend line or anything, or if we can expect some sort of a deeper pullback. This trend line would bring you all the way down to, somewhere down into 104-ish, 104 half. So I personally would like to see a pullback down to that trend line in order to look at a decent pullback opportunity for a continuation back to the long side. Let's take a look at the transports from a Dow theory perspective. So the transports look at how the transports are almost right back up at their highs. They've diverged a little bit from what the Dow was doing and had a really strong day on Friday. So this is a little bit, kind of a heads up. If the transports break above their highs, then maybe we should just go with it. Personally, I always like the deeper pullbacks, but you don't always get them. So let's take a look at the dollar index. The dollar index had a lot of strength on Thursday and Friday, and caused, a lot of things to sell off, like oil, crude oil, and the like. So we've got a level. We're right back actually into this breakdown level on the dollar index. You can see that breakdown level came in right here. Right, I'm just going to mark this on the chart and leave it on the chart so that we can reference it. We can reference it going into future weeks. And if you see, we have come right back in, and we are right at that level. So this is sort of where the rubber meets the road in the US dollar index. You can see we look like we're breaking through this trend line, but until and if we get a break above, let's say 80.84, which was this breakdown level, then I'm going to say that, this is looking like a potential reversal, potentially, but this is really the major resistance, and we need to get through that major resistance in order to get anything, bullish going on the US dollar index. So we're coming into a trend line. We're coming into a resistance level. This is a key level right where we closed at that line in the sand. You've had a momentum shift on the daily chart. So this is kind of interesting. We could be seeing a potential inflection point here, but I wouldn't really call that until and if we actually start getting some bullish action above this 80.84 level. So logically, let's take a look at the euro. Let's look at the euro futures. And the euro futures are just pulling back down into this key support level around 134.20. I think that's really going to be the major support, looking to see if we're going to hold that. You've got a trend line coming into play there, and you actually have, let's use this pen here. You can see here, resistance. We broke through resistance. We're coming back down and testing. Broken resistance becomes future support. So this is really the zone to look at, 134.20, to see if we're going to hold that level. So until and if we break that level and the dollar index can get above its respective resistance, then I'm going to have to say I'm still net negative on the dollar index and still net bullish on the euro. But, looking at those key levels, you want to see how they're going to react around there. Those could be the inflection points. Let's take a look at the USD CAD. The USD CAD is developing this nice little triangle pattern, and I like it. And I'm looking for some guidance outside of this triangle pattern, either to the upside or to the downside. So at this point in time, we really are overbought on the USD CAD, so a push down into this level and a break back up would put me on the bullish side. But at this point in time, you're just going to get chopped up in this range. I'd like to see some sort of a break of that triangle. Let's take a look at what else is interesting. Let's look at crude oil. So crude oil, I actually, in last week's video, I mentioned that I think we found short-term support there. And, I was right for, 2 days? And then we kind of failed that, and we broke back down, and we're breaking that key support level. So at this point in time, I think the next major support levels coming into play. I'm actually surprised at this. I was expecting more strength in the crude oil. So we've got $92 a barrel, $90 a barrel, and $85 a barrel. So I think there's going to be another zone of support coming in here. You've got a lot of congestion in this area, so you've got a lot of activity, both time and volume, from a time and volume perspective. So we could find support anywhere in this area. The reason why I don't really like the short on the crude oil is because we've really bottomed in downside momentum. So I'm really not looking for a lot more downside from there. Having said that, anything can happen, but I'd really look to see, like, is it going to catch a bid somewhere in and around that area? And I think the risk reward really favors the long side. But having said that, you are in a downtrend, and until that downtrend is broken, you're in a downtrend. So let's take a look at natural gas. So natural gas sort of did the same thing. It broke this triangle, and it looks like it's pushing down. The next major support level on natural gas is going to be $3.33 by the looks of it. You can see we have the makings of a momentum shift. So if we actually got down into this support level, let me just make this a little bit more prominent. Actually, I'm going to set an alert as well. And I'm going to set an alert for this this level. I'm going to make it a little bit weightier. This looks like an interesting area to me. With momentum bottoming down here and a quick move into $3.33. This support level off of this hammer. If we could get another momentum shift back up to the high side off of this level, that would be a level that I would really be interested in a potential swing trade. Not on the futures, but maybe on another instrument that tracks the futures, like maybe the UNG or something. Small position using options. So we're holding the zero line on the MACD. I think this level really looks interesting. So I'll be keeping an eye on that. Let's see how that develops into next week. If we actually come down to that level and then we find some sort of a reversal off of that level, that will be interesting. Let's take a look at gold, some of the metals. So gold is really tricky here. I mean, we did have this 618 hold, and now we've broken this trend line and we've come back down. At this point in time, I think in order to get bullish on gold, I would really like to see a break of this previous swing high around 1361. So gold is a little bit iffy to me. It's a little bit sloppy, a little bit choppy. We've come back down and tested this breakout of this trend line point. And I don't really have a lot on it. I think, as the structure is putting in higher highs and higher lows in terms of here's your higher low, here's your low, here's your higher low. I've got to stay on the net bullish side. But having said that, if we break this trend line, then I'd be expecting a move back down to retest these lows and possibly lower. So I'm just really going to stay away from gold. I think the decision points in gold are really, a break above here and a break below this trend line. So that's kind of, where I see the decision points. I think it's kind of in no man's land right now. We're at a really good potential support level. But having said that, it doesn't look very clean. So let's look at silver. Silver's just sideways. Your momentum's going lower. You're holding the MACD zero line. I mean, it looks a lot like gold, doesn't it? So I think the analysis is fairly similar. We could come and retest the top of this trend line, and that would still, keep us on the net, I guess, bullish side of silver. But, this is kind of what you got going on there, right? So that looks a lot like gold. Let's take a look at copper. Copper just looks sideways. Copper looks sideways. And it looks like it's putting in a, it's starting to coil. It's putting in a triangle or coil pattern. If you're familiar with those patterns, they're really one of my favorite patterns, actually, because usually once they've had enough time to build energy and they break out, they're usually a go with. So I like those patterns. on all different time frames. So copper's looking interesting there, putting in one of those patterns. Let's take a look at what haven't we looked at yet. Let's take a look at the 30-year bond. So the 30-year bond is looking more bullish than bearish, and we're holding this trend line. Momentum's topped out in the short term. We look like we might actually go with my trending indicator from net bearish to net bullish. So I think that we have the potential to test, you know, this congestion area which lines up with a 50% retracement of this last down move. I think that's the area that I'm looking at as long as we hold that trend line. Let's take a look at the 10-year. Ooh, 10 years tested at 618, and you've got this kind of trend line going there. So you're right at, you know, this is an interesting area to be at in the 10-year, because you see how you came right off that 618 almost to the tick. You know, you see this a lot in many markets. Now, okay, maybe I didn't draw this 100% clean, so let me just refinagle that. No, that looks pretty good. So you came almost to the tick and you came off that 618, and now you're right back down into support. So this is sort of where the rubber meets the road. If we hold this trend line and break up above the 618, then I think the 78.6 is in play, right around this 129.19 level. And you know, but you're right at a really interesting area. You're at an inflection point there, and it'll be interesting to see what happens. Let's take a look at what else do we have? TNX.X. Okay, so this is the inverse of the 10-year. This is the interest rate futures. So let's take a look at interest rates. So you've got the potential to move lower. I think interest rates, as long as they stay below this trend line, they are in a short-term downtrend. You can see in the background they are in a major, not a major, but an intermediate uptrend, a minor downtrend, right? So if you look at this until and if we get above this trend line, then I think interest rates are really going to go keep going lower. Having said that, we have the makings of a momentum shift here. So this is kind of interesting. You know, we're this is really denoting the 10-year bond that we're at sort of an interesting inflection point, right? It's mirroring the opposite of what we just looked at on the 10-year. I'll just jump back there at TY, and you can see here we're at a trend line support on the inverse on the interest rates. Futures we're at trend line resistance, and you know we're right into this zone. So this is interesting. I think we're at an inflection point with interest rates, and it'll be interesting to see which way they resolve themselves. I think we've covered most of the major markets. We have, for those that attend the CSTA Oakville meetings, and we've been hosting trading plan development series that has been going on for the last several months, for the last several sessions. So if you're interested, we're going to have on the, let me just double check the date. It's always the second Wednesday of the month. So on the 13th of November, we have a very interesting speaker coming in to talk about his journey and his sort of trading plan. And I'll be announcing that very soon, so keep an eye out for it. I look forward to seeing you there in Oakville at the Queen Elizabeth Park Community and Cultural Center. And I think I'm going to wrap up this video. Pretty lousy day out today. Hopefully you are able to maybe work on your trading plan a little bit, or spend some quality time with the family, maybe have a movie night. I'll leave that up to you. So good luck in the markets, good trading, and we'll look forward to seeing you at an upcoming CSTA meeting on the 13th or at the next video update. All the best.